Yesterday, you IB'd me. I've got my research out. You scrambled. You're basically looking at the funding environment now as a result of what's happening. What's your conclusion?
So, Ed, the first part, I am kind of surprised people are talking about contagion in the banking sector and how undermined or how invisible the Valley's concerns are at the moment for what SVB has done, right? I was amazed until Sunday evening. I did not know whether deposit holders were protected. We were waiting and we were watching what it does. SVB leaves a huge hole in the Valley, 65,000 startups. Finally, on Sunday, we heard about deposits that they were taken care of. And then what about credit?
Right.
So I don't think people appreciate what a big gap this is and how few alternatives the Valley has to kind of replace it.
You're covering fintech now with us in San Francisco, but you actually spent a long time looking at the banks. And I'm trying to get the read-through from what happened with SVB through to what's playing out at Credit Suisse today. What do you make of it all?
It hit a bit closer to home for me. I was at Lehman when the bank went under, and I am, again, amazed at how little we've learned over the years. We thought that by Sunday, if we come in and say all deposits are protected, we are good. This is not Lehman. This is not going to have any contagion impact. Did we really think, and were we really that short-sighted? At Lehman, we thought, okay, let's make an example out of this one bank, and then we'll see how this goes, right? With SVB, this is one bank. We're discussing moral hazard, like, should we be using taxpayers' money to bail this one bank out? When you have a fire in your house, Ed, what do? Do you think, well...
I'm hoping I don't have a fire in my house, but no, I get your point.
How do you think about it? Do you think, okay, let me put out that fire first? Or do you actually go and think, oh, if I put this fire out, the person who lit the fire will never realize what mistake they made?
Right.
That is the discussion we had on Sunday. And I was amazed at how little we learned with what happened with Lehman and how little we learned that in this environment, any confidence crisis, the way it can blow up, I'm at short of words, I'm lost of words.
It becomes then a lesson for regulators too, Diksha. And at the moment, this is the difference. SVB, not systemically important, but was too big to ignore. Whereas many are now wondering whether Credit Suisse is too big to bail out in many ways. It's certainly too big to fail. I'm interested in the repercussions from your perspective, from a regulatory perspective, when it comes to banks, but also those fintechs too.
So very simple, Carolyn. First things first, these companies, these startups, there's a reason why this bank grew to the scale that it grew, right? It's not like Citi was sitting there with open arms and banking all these startups and while Silicon Valley was poaching them away. It's very hard for big banks to bank the startups. This is one bank that understood the Valley, that understood the VCs, that understood the companies they were banking and they were supporting for 40 years. Operationally, risk appetite-wise, there are very few companies who can actually come in and fill in that gap. Now, talking about the systemic impact of this, right? If I'm not sure whether my deposits are safe, people were thinking that Silicon Valley's deposits will probably move to FRB or other banks. But do you think that as a startup founder, I'm comfortable putting my money elsewhere when I'm not even sure whether I'm going to get that back from the first bank that we had? So obviously, there's a confidence crisis, and I think it'll be a while before we can fix this problem.